Hello everyone, welcome back to the channel. Today we're looking at a very large company where for once we're going to see a lot of green flags for and not many red flags. And that's Microsoft Corporation, ticker MSFT. They had earnings today. As we can see up at the top, they were up 7.24% on those earnings to a price of $295 a share, continuing that climb even after hours. And we'll see what's going on with the stock. Why are they up so much off these earnings? What a fair value for the stock is, and why I sold out of it back in last July and am not regretting selling out. So we'll start with some simplified technicals before we get into the fundamentals. We see that there was a very long uptrend from 2018, touching 2020, touching it again recently. Back in January was the last touch. A downtrend as of November of last year, and it's trading typically within the channel of $225 to $310. Those seem to be the support and resistance lines. It's bounced up, down, and is bouncing back up right now. Looks like it could break that $300 level within the week. We are looking at the critical numbers for the company right here, 2019, 2021, and 2022. Growth over here between the last year and a compound annual growth rate over the last 3 years. And we have things marked as green, yellow, and red, whether it's positive, negative, or neutral. So we start with top line revenue, very good. We look for something 10 to 15. We see 16.36. Cost of goods is climbing, not quite at the rate that the top line revenue is. This last year, it did surpass top line revenue, but typically it comes in approximately 3% below. The gross profit is climbing at somewhere in the 17% range. Amazing growth. Net income, we see annual compounding of almost 23%. This last year was only 19%, so that might be slowing down here a bit. Once you get to a larger size, it's more difficult to pack on those numbers. $1 million in growth to a small company is a large percentage, but $1 million in growth to them is nothing. The expenses have been increasing as to be expected with a growing company. 11.5% annually, 17% this last year, still well underneath the top line revenue growth. So we get down to the EBIT, almost 25% growth, which is incredible. 19.26 in this last year. The gross profit percentage, very healthy, in the mid to high 60s. We see annual growth of almost 1.25%. This last year there was a decline, but it could just be the mix of products where that revenue is coming from. Net profits, also incredibly healthy. We see growing at a very strong rate, moving from 31% to nearly 37% in the time frame that we're looking at. So for earnings per share, last year they came in at $9.21. That would, assuming a 20 PE ratio, with something more like this, a growth stock, a tech company, some would factor it higher. But that'd come in with a share value of $185 by my metrics. Analysts are expecting earnings of $9.33 this year, which would bring the share price up to $187 per share based on my metrics. As for assets, we see that they have a lot of assets, growing it at a very fast rate as well, almost 8.4% year over year. Liabilities, not a whole lot of liabilities, almost 2.5% growth year over year, which we don't want to see them growing, but everything else is so positive that number is not a major deal as it would be with some others. That's why it's only yellow. Book value, we see book value growth of almost 4% this last year, 18.62 compounding from 2019. We saw a huge jump from the 50s to the 80s from 2019 to 2021. With that, we finally are able to assign a value. Usually I like to look at 3 times the book value as a price for the shares. And in this case, that only gave us $35. 42 for a forward value, assuming the growth that we've seen in the stock. Free cash flows. They have healthy free cash flows, growing them very quickly as well. 16% growth last year, 19% year-over-year growth. That would value the company around the $175 mark, $210 going forward at this pace. Share count, a declining share count. They seem to be buying back 0.75% per year of their share, which is something that we like to see. It could probably be more, but they seem to be deploying their capital in other ways that are helping them. Shareholders' equity has been growing nearly 17% a year. Last year, 17.3, compounding 17.6. Their dividend, they do have a very small dividend, 68 cents a quarter, which comes out to $2.72 annually. The dividend investor in me would only be willing to pay $78 a share for something like this. I need to become more of a growth investor, and that's part of this exercise here, is seeing what contributes to the value and how can I categorize the stock. This is definitely a growth play. The rate that they're growing their dividend is healthy. 9.7% this last year, nearly 7% compounding every year. That give us a value of $83 going forward at that rate. And then ROE, we like to see an ROE above 30. Something above 50 would be even better. This is a climbing number, which we like to see, and they're growing it rather quickly. This last year, it grew 1.2%, and compounding, it's growing at about 12.5%. So what do I see for the stock? Based on my metrics, I think it's $150 stock. At the most that I would be willing to pay for this is $200. And growth-wise, we see a lot of growth in here. With all the metrics, 20% would be my max growth. So I'd say we're looking at a share price that I personally wouldn't really be comfortable paying for another 3 years minimum. So I don't think that this is a play that I'm going to be getting into. I think I've missed the train on gains, and it's going to become one of those massive companies that just become a slow grower over time, and new competition will be better and take away market share. So once you have established market share, there's really nothing but downside potential for you. And I'm currently reading One Up on Wall Street by Peter Lynch. I'd like to create a summary of that and post that once I'm done reading it. But he talks about that exactly, where once you get into these multi-billion-dollar companies, they don't have a whole lot of growth left in them. It takes a lot to get 1 percentage point. And now we can get into the most recent earnings of the company and see what's going on there. I am not a fan of the way that they have this set up. It's kind of cool that they use their own technologies, PowerPoint, Word, and Excel for displaying information, but I can't insert formulas into the Excel. It's not worth it. So we're just sticking on this page where they show and they summarize for us. So they talk about how revenue was $52.9 billion, 7% increase from the same quarter of last year. So that's what we like to see. I mean, they're coming in at a slower growth rate than they have been previously, but it could just be a down quarter for them, and they can see the growth made up later in the year. Operating income of $22.4 billion, up 10%. Net income, $18.3 billion, up 9%. So if we go back and look at our net income, they've been growing that at last year it was 18.72% with a compound annual growth rate of 22.8. So the growth is slowing, but they're still growing. Their earnings per share were $2.45, up 10% from the same quarter of last year. Analysts have them coming in with $9.33 this year. So they're off to a very strong start on that front. And now we look at the different business segments and how those fared. We could do this down in the actual numbers. I don't think they give percentages down there, though. Office commercial products up 13, up 1, up 17, up 16, up 17, down 9%. Revenue in more personal computing was $13.3 billion. Windows OEM decreased 28%. Device revenue decreased 30%. Windows commercial products, okay, that increased by 14%. Xbox increased by 3%. Search increased by 10%. And with their acquisition of OpenAI and ChatGPT and them working that into the Bing search engine, they may see more traffic to Bing and grow that revenue coming from search. They returned $9.7 billion in the form of share repurchasing and dividends in the third quarter of 2023. Now we get down to the actual numbers. So we see revenues, total revenues were up from 49 to 52.8. The cost of those revenues, total cost of revenue, is up from 15.6 to 16.1. Neither of those are bad numbers. We see gross margin increasing by 3,000. We see a lot in research and development, more this quarter than the same quarter of last year. Net income moving from 16.7 to 18.3, and we end up with our earnings per share that we've seen. So I'd like to look at the balance sheet. This balance sheet, we see total assets moving up from 364.8 to 380.1. Total liabilities moving down from 198.3 to 185.4. Those are both very good, the directions that they're headed. Their current liabilities are a fraction of their total liabilities, so nothing to be worried about there. Stakeholders' equity. Total stakeholders' equity has moved up 30,000. That's incredible. And then down here we have the statement of cash flows. So we see cash and cash equivalents at the end of the period are more than double what they were the prior year. I looked through everything else that they offer, and I didn't see anything that jumps out that needs sharing. There's a lot to unpack here, a lot of numbers. I mean, this company sees incredible growth. Even then, like I said, we assume 20% growth. It's far too overvalued for me to even touch. I wouldn't sell out if I were you, if I held, but I personally will not be buying back into it. I will watch from afar and cheer you on as you make gains. But the dividend it's not there for me. Just the value is not there. I'd like to see it hitting $200 right now. I would be buying in heavy. But the fact that it's almost hitting $300, count me out. And I'll go make money elsewhere. So with that, I want to thank you guys for watching. Please like, comment, subscribe, especially if you made it this far. I want to know what you want to see. And we'll take a look at more earnings as they come out. I know there were quite a few that came out today, coming out tomorrow. Aflac is one of my holdings that I want to take a look at. And I don't know that we need to take a look at Google, but we can if that's what you guys want. If this gets 10 likes, we'll take a look at Google. With that, I want to thank you guys, and I will catch you next time.